Thank you for standing by, and welcome to the Pact Group Annual General Meeting 2025. I would now like to hand the conference over to your speakers. Please go ahead.
Thank you, Harmony. Ladies and gentlemen, welcome to the 2025 Annual General Meeting of Pact Group Holdings Limited. My name is Raphael Gaminda, and I'm the Executive Chair of Pact and Chair of this meeting. I'd like to welcome everyone attending. The notice of meeting was sent to shareholders and made available on the company's website on the 10th of October 2025. I'll take the notice as read. The Company Secretary informs me that we have a quorum present. I therefore declare this Annual General Meeting of Pact Group Holdings Limited open. I'd now like to introduce your director, senior managers who join me online today. Directors in attendance are Michael Wachtel, Carmen Chua, Nick Perkins, Tristan Smith, and Sanjay Dayal, our Managing Director and Group Chief Executive Officer. Our Chief Financial Officer, Paul Washer, and our Company Secretary, Catherine de Bont, are also in attendance. Also in attendance is Wilfred Liu, our Lead Audit Partner from Ernst & Young for 2025. Wilfred is available to answer any questions regarding the conduct of the audit and the preparation and content of the auditor's report. Christina Piccola of Computershare, the company's share register, is also with us today and will be acting as our returning officer. Minutes of the 2024 Annual General Meeting and the Extraordinary General Meeting held November 14th, 2024, and the Extraordinary General Meeting held 12th of June 2025 have been approved by the directors and are available for inspection by any shareholder by contacting the Company Secretary. There are 3 items of business to be considered at today's meeting, with item 2 requiring an ordinary resolution and item 3 requiring a special resolution. Each resolution will be put separately. There are no voting exclusions applicable to the resolutions. Now for some housekeeping matters. Today's meeting is being held online via the Computershare meeting platform. This allows shareholders and proxy holders to attend the meeting virtually. All attendees can listen to the webcast of the meeting and watch the presentation. In addition, shareholders and proxy holders have the ability to ask questions and submit votes. Voting will be conducted by way of a poll. In order to provide you with enough time to vote, I will shortly open voting. The final results of the polls will be available later today on the Pact website. If you are eligible to vote at this meeting, the vote icon will be visible at the top of the platform. Selecting this icon will bring up the resolution and present you with voting options. To cast your vote, simply select one of the options. There's no need to hit the Enter button, as the vote is automatically recorded. You have the ability to change your vote until the time I declare voting closed. Shareholders and proxy holders may submit written questions at any time from now, but all questions will be addressed after the formal items of business are put to the meeting. Questions should be addressed to and through me as Chair. To ask a written question online, please select the Q&A icon at the top of the platform and select the topic your question relates to. Type your question in the chat box at the bottom of the screen and press send. These instructions are also available in the online meeting guide. For those shareholders and proxies who wish to ask a verbal question, an audio questions facility is available. Instructions on how to ask a verbal question are set out on the Computershare meeting platform. Your questions may be moderated, or if we receive multiple questions on one topic, amalgamated together. We will allow a reasonable amount of time to ask questions. If we run out of time to answer all of your questions, we will endeavour to answer them in due course by email or posting responses on our website. If you require assistance during the meeting or encounter difficulties finalising your votes, please refer to the online meeting guide or call +613 9415 4024. I now declare voting open. Please submit your votes at any time during the meeting. I will give you a warning before I move to close voting. I am holding open proxies in my capacity as Chair, and it is my intention to vote all such proxies in favour of all resolutions. Any directed proxies that are not voted at the meeting will automatically default to me as Chair of the meeting, and I'm required to vote those proxies as directed. I have a relevant interest in approximately 88% of the company's issued share capital, and intend to vote in favor of the resolutions. I'll now move to the items of business to be considered at this meeting. The first item of business relates to the tabling of the company's financial reports for the year ended June 30th, 2025. The Corporations Act requires a financial report, the director's report, and the auditor's report to be received and considered at the AGM. Shareholders are entitled to ask our auditor questions relevant to the conduct of the audit and the preparation and content of the auditor's report and other related matters. As mentioned earlier, Wilfred Liu of Ernst & Young is also in attendance and available to answer any such questions. I ask the company secretary to record that the financial report for the company and its controlled entities for the year ended 30 June 2025, together with the director's report and auditor's report, have been received and considered by shareholders. We will now proceed with the resolutions to be considered. As item 2 relates to, first of all, the re-election of Rafael Geminder. As item 2 relates to the re-election of myself as a director, I'll now hand over to Michael Wachtel to chair the meeting. Michael.
Thank you, Chair. Good afternoon, ladies and gentlemen. Item 2 of the meeting relates to the re-election of Rafael Geminder as a director of the company. Rafael Geminder, who was appointed to the board on the 19th of October 2010, retires and offers himself for re-election at today's meeting. Rafael's qualifications, background, and experience are summarized in the notice of meeting and in the company's annual report. The board recommends Mr. Geminder's re-election. I will now put the resolution to the meeting that Mr. Rafael Geminder, who offers himself for re-election and being eligible, be re-elected as a director of the company. Please record your vote online for item 2 if you have not already done so. Valid proxy votes received for this resolution are currently shown online. As indicated in the notice of meeting, I intend to vote valid undirected proxies given to the chair of the meeting in favor of the resolution. I'll now hand the meeting back to your chair, Mr. Rafael Geminder.
Thank you, Michael. The third item of business relates to approval of amendments to the company's constitution, which may only be made by way of a special resolution of shareholders. To be passed, this item requires at least 75% of votes cast by shareholders entitled to vote on the resolution to be cast in favor of the resolution. As the company has recently delisted and is no longer subject to ASX listing rules, it is proposed that the company's constitution be amended to remove rules that relate or refer to the ASX listing rules and to reflect its status as an unlisted public company. Material amendments proposed by the company's constitution are summarized in the notice of meeting. The proposed amended constitution and a copy with the proposed changes shown in markup have also been available on the company's website since the 10th of October 2025. I ask the company secretary to record that the proposed amended constitution has been tabled at the meeting and received and considered by shareholders. The tabled constitution is available via the Computershare online meeting platform. The board considers that the proposed amendments generally reflect corporate and commercial practice for unlisted public companies. I will now put the resolution to the meeting that in accordance with Section 1362 of the Corporations Act 2001, approval be given to amend the company's constitution as set out in item 3 of the explanatory memorandum with effect from the close of the meeting. Please record your vote online for item 3 if you've not already done so. Valid proxy votes received for this resolution are currently shown online as indicated in the notice of meeting. I intend to vote undirected proxies given to the chair of the meeting in favour of the resolutions. We'll now address questions from shareholders joining us today, starting with questions received prior to the meeting. Written questions will be read out by our AGM moderator, Carolyn Ireland, General Manager of Investor Relations, Treasury and Transformation. Carolyn.
Thank you, Chair. Chair, we have received 3 questions prior to the meeting from shareholder Richard Wilkins. Richard's first question: the 2025 annual report made no reference to a potential problem with the Australian thin capitalisation tax regime. This contrasts with the commentary on page 2 of Appendix 4D and with the 2025 half-year report and accounts which state the income tax expense for the half-year, excluding tax and underlying adjustments, was $9.8 million, representing an average tax rate of 39.9% of underlying net profit after tax, up on the prior period, which was 29.5%. The recent changes in the Australian thin capitalisation regime, which came into effect on 1 July 2023, resulted in an increase in the effective tax rate in the company's FY25 half-year accounts due to potential denial of deductibility of interest costs. In FY24, there was no denial of deductibility of interest costs. End quote. The question is, does this mean that Pact is now confident that there was no such potential problem for FY25 and that there should be no such thin cap problem in future years, assuming business as usual? Thank you.
Thanks, Caroline. I'll ask our CFO, Paul Washer, to address this question. Paul?
Thanks, Chair. And Richard, in relation to your question, management assesses the recoverability of deferred tax assets at the end of each reporting period. At the end of FY25, we assess that the company should derive sufficient future taxable income over the next 15 years, which should enable the recoupment of those deferred tax assets that were booked at the end of FY25. And this was in line with the new Australian thin cap regime. However, it is important to remember that this assessment is continually evaluated and will be done as we go through time.
Thank you.
Chair, Richard's second question is, Pact has made substantial investment in CapEx in recent years, including in FY25. Can you provide guidance on the amount of CapEx expected in FY26?
Thanks, Caroline. Once again, Paul, I'll ask you to address that question.
Yeah, thanks, Chair. Pact's average capital spend over the last 4 years has been approximately $100 million per year. Pact does expect that this level of capital expenditure will continue into the foreseeable future.
Chair, Richard's third question is, the gearing numbers on page 3 of the FY25 annual report are helpful. Assuming no major sales or purchases of assets or businesses in FY26 other than forecast CapEx, what are Pact's targets for gearing and interest cover, including leases, at 30 June 2026?
Thanks, Caroline. Again, Paul, could you please answer that question?
Yeah, thanks, Chair. So we have gearing and interest cover covenants in our debt facilities, as is customary of these types of facilities, and we monitor and forecast the compliance with these ratios. Consistent with prior periods, we are not providing any guidance or forward estimates other than the CapEx spend, and so we will not provide forecasts of our debt facility covenant positions. Information regarding our covenants is commercially sensitive and therefore confidential. Thanks, Chair.
Caroline, were there any other written questions received prior to the meeting?
There were no further written questions received prior to the meeting, Chair.
Thanks. So with that, I'll now take questions from shareholders joining us today, starting with questions received in writing via the online platform.
Chair, we've received a number of questions from shareholder Mr. William Nguyen. The first question relates to bank borrowings, and the first question that we'll be running through relates to bank borrowings and lease liabilities. Could Pact please explain the details on page 45 of the 2025 annual report under section 4.1, which shows total bank borrowings of $560 million and lease liabilities of $457 million. I would like to understand, and there is a number of dot points, why has the total debt increased compared to the previous year? How does Pact plan to repay this debt? What is included in lease liabilities, property or equipment? Why is the lease liability amount so large? Do these lease liabilities cover 1 year, 10 years, or include past leases? Why are the lease liabilities almost equal to total debt? Again, how does Pact plan to pay these lease liabilities? Who is the main landlord receiving these lease payments, Kin Group or Benjamin Group? Thanks, Chair.
Thank you. I will also hand that to Paul. It's a lengthy question, isn't it?
I'll try and get through as many dot points as I can. I'll refer shareholders to the cash flow statement. That's a very important financial statement that is worth reading, but you'll see the main drivers of total debt was $120 million of capital that was spent last year or during the FY25 year, as well as $35 million of tax that was spent, which is predominantly driven from the Crates transaction that was done in December 23. So those were the two major cash flows that resulted in a higher net debt. Clearly, we we plan to repay the debt through future cash flows. I don't think any companies differ that. We look at our future cash flows. We expect to pay that can service the debt. Included in lease liabilities are just our properties. And lease liability is a significant amount just because we lease most of our properties in Australia and New Zealand. And as you would know, under the lease accounting rules, depending on your lease, you have to accrue the maximum not only of the initial term but all the options that are under that lease. So in 2025, we entered into 2 new leases. They were 10 plus 10 plus 10 years. So invariably, we have to accrue the full lease liability over a 30-year period. So hence why you'll see at some points in time, the lease liability actually increases, maybe disproportionate to what shareholders had read in other years. In terms of the landlords in respect to those that are related parties, those are all leases that are paid to Kin Group. Thanks, Chair.
Any further questions?
Yes, Chair. Another question from William Nguyen. It's in relation to share transactions by personnel. It's been noted that several Pact personnel have recently sold shares. Now, William now lists 3 individual employees, which I won't name, but he stated they've sold shares on 3 different dates, one on 2 May, one on 29 July, and another on 29 July. And he then stated, please note that 13 July was the date Pact was delisted, and then 29th of July, Pact began issuing share certificates to shareholders. He then stated, it's also concerning that Pact encouraged staff to sell shares before delisting. Could the board, it's a difficult question to run through, but it says, could the board, whether this could be considered improper or against government standard, for example, were these 2 forced to sell out their shares to keep their jobs or under pressure from the chair?
Okay. So, firstly, a number of the Pact employees participated in the employee share plan operated in 2021. Shares issued under the plan were subject to a 3-year trading restriction period, and following the release of these trading restrictions, employee shareholders were entitled to deal in their shares in the same way as any other shareholder, subject to restrictions arising under the company's policy for dealing in securities. In the lead up to the delisting from the ASX, several employees elected to sell their shares on market. Post delisting, as is the case for all shareholders, the remaining employee shareholders are entitled to either hold or deal in their shares, subject to compliance with the company's policy for dealing in securities. In the event of the sale of their shares, the price negotiated is a matter between the employee shareholder and the buyer. Any other questions?
Yes, Chair. Another question from William Nguyen.
Yep.
Share acquisition by Benjamin Group. I recently confirmed through Computershare that Benjamin Group acquired another 100,000 shares from a shareholder. Could the Chair confirm whether the shareholder personally approached Benjamin Group to sell his shares? I understand it is illegal to use information from a share register to contact shareholders for the purpose of acquiring shares. Additionally, it seems unfair that Pact has not provided any trading facility for shareholders, forcing them to approach Benjamin Group to sell their shares. Could Pact please reconsider this and open a trading facility in the interest of fairness and transparency?
So I'm not quite sure what the question is here. So, one question is, could the chair confirm whether an individual was approached Benjamin to sell his shares? And I'm not sure whether it's my role as the chair of Pact to really confirm whether shareholders approached Benjamin. That's really a question for Benjamin. So maybe I'll move to the second question. Let me see if I can understand that second question. Could Pact please reconsider opening a trading facility in the interest of fairness and transparency? Well, I understand the question, and we'll take that on notice. Thank you.
Thank you, Chair. Another question from William Nguyen around proposed constitutional changes. Pact has proposed a change to the company constitution stating that shareholders with holdings worth less than $500 cannot transfer their shares, and that the board may sell such shareholdings unless a written notice of objection is provided. 3 dot points follow, which has Pact prepared a template letter for shareholders to use if they do not consent to the board selling their shares? How does Pact define the per share value used to calculate the $500 threshold? Given that Pact previously said it might open a trading facility after delisting but did not, shareholders are concerned that this new rule could again be unfairly implemented where no formal template of written notice to the board of directors is provided. So there's 3 dot points, and then another question down the bottom. Could Pact please provide clarification on these points and make the process transparent for all shareholders?
So I'm going to ask Catherine to respond to the various questions, but there's quite an assumption here around this marketable, unmarketable parcel. There's an assumption that that's going to occur, but before, so maybe I'll just ask Catherine to respond to that question.
Thank you, Chair. First, I wanted to perhaps correct a misunderstanding that this is a new provision in the Constitution. Actually, this provision's been in the Constitution for some time. The main change we've made here is that obviously when the company delisted from the ASX, the listing rules no longer applied, which included the definition of unmarketable parcel or marketable parcel in our case. So what we've sought to do is replace the definition of marketable parcel with as close an approximation as what was in there previously under the listing rules. And in exercising any unmarketable parcel facility as this rule allows, the directors of the company are very aware of their obligations of the company to act in its best interests, and this would apply to any determination made under this provision, including in relation to the value or otherwise.
Thank you. Any other questions?
Chair, that is now 4 questions, and each of them contain sub-questions from William Nguyen. He's actually submitted a number of other questions. However, to allow other shareholders an opportunity to ask questions, I suggest that we respond to William's remaining questions offline.
Thank you.
Yes, thank you. On that basis, then, we have received another question from another shareholder, Mr. Jeremy Matchett. Jeremy asks, could further colour be provided on what the $100 million CapEx spend would be aiming to achieve?
Yeah, I mean, I could ask Paul to answer that, but maybe just, very quickly, we spend CapEx to further the interest of the company. And so I don't think it's a valuable exercise to get into, all the various issues we spend money on, other than to say it's spent in the best interest of making the company a better company. Any other questions?
Chair, we have received no further written questions.
Okay, so thanks very much for that, Caroline. So if we have no further written questions, we'll now take verbal questions. Operator, do we have any phone line questions?
There are no questions via the phone lines.
Sorry, Harmony, did you say there were no questions?
There are no questions via the phone lines.
Thank you. We'll now conclude questions. Ladies and gentlemen, that concludes our discussion on the items of business. I'll now pause for a minute in order for you to finalise your votes prior to closing the voting system. Please ensure that you've cast your vote on all resolutions. Okay, voting is now closed. Thank you for your attendance and participation at today's AGM. The voting results will be declared by notice made available on the company's website later in the day. I now declare the annual general meeting of Pact Group Holdings Limited closed. Thank you.